All right, I'm Lacey Staffaker with Interfaith Housing. I worked at Interfaith for a little over 6 years, and I'm the Director of Financial Capabilities, which is a big, long title, which just means the Director of the Kansas IDA program, which we'll get into. I am here today with Diane Crabtree. She is our home ownership manager. I'm going to talk about the Kansas IDA program. Has anyone heard of an IDA program? Okay, an IDA program is an individual development account, which means it's a savings account. You save $1 and we match $2. For every dollar you save, we match $2 for the purchase of a specific asset. Your assets can be college education, small business, home repair, or home ownership. So tonight we'll talk about the home ownership. You save up to $3,000, we'll match with $6,000. That gives you $9,000 for the purchase of your home. Home with a partner, husband, wife, partner, however, an individual, and you both are going to be on the deed of the home. Each person can do the program. Each person saves up to $2,000. They get matched with $4,000, which gives them $6,000. So in total, it gives you $12,000 to put down on the home for closing costs and whatnot. Now, if you have the $12,000 if you're a couple purchasing a home, or the $9,000 if you're an individual, and you team up with RCB and do FHLB, that's an extra $5,000. I mean, a couple could have $17,000 and awesome. An individual could have $14,000, which is incredible. Part of the IDA program, it is an application process. So you fill out an application. You do have to be income eligible. The income limits are, for one person, it's $24,980 or below. That's what you make, or below. We have it all broken down from 1 to 8, but for a family of 4, it's about $50,000 or less. So it is to the 200% federal guideline of poverty is how you would qualify that. And that's per household, the income per household. You do have to be a resident of the state of Kansas, and you would have to purchase your home in the state of Kansas. And you would have to earn the income. You have to have a job. You have to have earned income.
Or be self-employed.
Self-employed, yeah, you could be self-employed too. So you go through the application. The application is super simple. All we need is your last 3 months of pay stubs or last year's W-2. Then you do a series of homework. We go into what we call the homework phase. The homework phase is you have to do an online financial education. It's a simple course, takes you 2 to 4 hours, if not sometimes less than the 2 hours. Then you track your spending for 30 days and build a budget. You also have to pull your credit report and your credit score. After you do that step, so that's about a 30-day process. After you do that, to whatever asset you're going to save for. So we have a credit counselor for college education, one for small business, and then one for home ownership and home repair. Diane's that one. Once you meet with that individual, I know it sounds like a lot of steps up front. It goes really quick. It's super simple. We make it very easy on you. Once you hit that,
a lot of instruction.
Yeah, we provide a lot of instruction. Our goal is to get you into the program and purchasing that asset. So
will you help them along the way too when you're setting up that initial step?
Oh yeah, we are in constant contact. If it's by email or by telephone, we're in constant contact. We do have requirements. It's the minimum of 6 months savings to reach your goal, and that's the $3,000. So you do have to save from 6 months, but if you know that you're wanting to purchase a home and you know that it could take you 6 months or more, do fill out an application, because that is free money on the table. We do have partner financial institutions around town where you would open your savings account, and then for the first deposit is the minimum of $25. You put in the deposit, we start matching immediately. It's an immediate match, but you have to save for that 6 months, and then you can withdraw the funds.
You do have up to 4 years to save.
Yeah, you have up to 4 years to save money.
Yeah.
So you put they call it like a soft lien or a second mortgage on
Nope.
the house?
Nope.
So it is free and
Nope,
clear.
and you don't have to claim the money in taxes, nothing.
Right.
So
So you
it's
don't
just,
deny-
The program, like for the college funding at one point and then later again another one for?
you can only use it one time.
Okay, that's what I wanted to know.
You can only use it one time, yeah.
But you could qualify for the other stuff, the other like, you know, if you meet those qualifications.
Right, and so if you do take the program, say if you do start the program for college education and you haven't used any funds and all of a sudden you want to switch to home ownership, you are more than welcome to do so. Or you purchase this home and you want to do home repair, that's
Right.
More than
Sometimes people are able to get the down payment together.
right.
And they're like, well, I really don't need it. Well, you can switch to home repair if you haven't used the money.
Nice.
So that's nice, so.
And one of the big, I mean, we do credit repair, we do talk with you one-on-one, but it's more individual. If you are working with a lender or, you know, we do let them do their job because like Oscar said, there is so much verbiage and things, and each financial institution does things so differently that if you are working for a lender, we do direct you there. The other thing, and Valerie said this, is that we do recommend you have that relationship locally in a financial institution. We push for that. We do have other options. If you are going, we have credit repair loans that we can get through financial institutions here in town. But yes, I mean, we are there for you to hit your goal of purchasing that asset.